Cam, your research challenges the idea that gold is a reliable short-term inflation hedge. When rates remain high, what has to be true for gold to keep rising anyway?
So the first thing is that gold is a volatile asset. Think of gold as being as volatile as the S&P 500. So that means that there will be a lot of dispersion. It means that gold could be a very effective short-term inflation hedge in one particular period and completely ineffective in another period. So given that volatility, it works sometimes it doesn't work. The one thing we do know is over the extreme long term, over millennia, gold has held its real value.
Juan Carlos, when rate expectations change, what does a bond strategist see that a gold strategist might miss and vice versa?
Well, that's a very good question. The first thing that I would say is that we look at gold from the perspective of four key drivers. Okay, there's four drivers to the gold price. One of them is economic expansion. The second one is risk and uncertainty. In a broad sense, we can discuss later. Then we have opportunity cost, and then finally momentum. Within opportunity cost, there's going to be a natural negative correlation or relationship between interest rates and gold. So obviously, the higher nominal yields go, the higher the opportunity cost of gold, and therefore, they decrease. Now, what specifically to your question, I think that what is interesting here is that gold is a risk hedge, very generally. It may be really high inflation, deflation, but it's just more generally about high risk. And this is why the relationship is not linear. And I think that what gold is capturing, and especially capturing now, even as the long end of the interest rates curve is increasing, the reason why gold is increasing as well is because of this risk component, this risk premium that investors are using in many ways gold to hedge against.
Paul, savers are very happy that interest rates are no longer at zero. So if we're looking at a choice between an attractive treasury yield today and gold's potential protection tomorrow, how do you explain that?
Well, first of all, you're talking to a gentleman who was a certified financial planner for 36 years. And, we say the word diversification in our sleep, over all that time frame. And for me, if people ask me, should I have gold or should I have some of these other paper assets that can provide an income? My answer is yes. Both have a place. I mean, in different degrees based on who the people are, et cetera, and so forth. But people have to remember that in times of uncertainty and in times of instability, whether it's currencies or political systems, et cetera, gold has the ability to retain its value in ways that have not been matched by any other traditional investment asset. So I believe that gold and silver both have a place. Again, not an overwhelming place because I think the world is generally stable right now. But when things do become unstable, people do rush towards gold and silver, and they will be glad that they have it on hand because that's what the world wants. Because gold and silver provide what generally currencies and political systems have not provided over the extended period of time when you have much instability and uncertainty, and people need that because when you're using a diversified approach, you need, of course, for things that grow, they give you income, etc., and cushion and emergency funds and everything else. But gold and silver have a place because gold and silver are the precious metals are a diversification against the risks of counterparty risk that many paper assets have. So definitely they should have it. And right now, I think it's as good time as any, so that you can have a broad approach and be diversified, so you can handle whatever the world throws at you.
Cam, any response to Juan Carlos's four drivers? What's most relevant today?
Yeah, so I generally agree that the gold price is driven by multiple factors. Whether it's four dominant factors, or more. It's also the case, and this makes it even more complicated, the importance of different factors varies through time. So even if you knew the driving forces, you don't know the different effect that each has and how it changes through time. So let me just briefly comment. I agree that gold has very interesting properties in terms of diversification. It's a rare asset that, at least since 1971, its correlation with the S&P 500 is on average 0. And that means that it's got a hedging property that's expected. However, I do want to emphasize that given the volatility of gold, that sometimes it doesn't work as the safe haven in economic stress. So in terms of the 4 driving factors, I would add one additional factor, and maybe it's under the economics part, and that is the consistent interest of China in accumulating gold. From official holdings, we've got some idea, but there's also the unofficial buying. As most people know, China has a relatively small amount of gold compared to the US.
Let's move on to the next segment.